Hey everybody, Chip Nellinger here, Blue Reef Insurance Group. Want to come to you and talk to you a little bit about the craziness in this cattle market here. We've been at new all-time highs, and then all of a sudden in 8 trading sessions, we took $30 off of live cattle, $60 off of feeder cattle out of the blue. We can put the excuse on a lot of different things. President Trump's tweet really took people by surprise. We had potential imports of Argentine beef into the system to try to cheapen the price of beef. We had some talks with Mexico on the potential opening of the Mexican border to importing feeder cattle out of Mexico and the United States again. Also some trade talks potentially with Brazil that would see some tariffs being done away with there and allowing Brazilian beef to be imported in the United States again. Whatever the excuse is, one thing is for certain. This market is as crazy and as volatile as I've ever seen a market in 30 plus years being involved in markets. My fear is taking producers by complete surprise in here. Just utter amounts of panic at times, understandably so. The volatility that I'm seeing in this market is unprecedented. I've been through a lot of crazy markets in 30 plus years in our ag markets and really all futures markets. This ranks right up there with the volatility you're seeing. I mean, with these limits now, $13.75 in feeders for expanded limits, $10 plus in live cattle. We've seen multiple days in a row of limit moves. It's just unprecedented. When it doesn't close limit and trades for a little while, you're seeing $3, $4, $5 swings in the matter of just a couple minutes. So it's really treacherous in these markets right now. If you're sitting here and we're hearing through the grapevine, we're talking to our producers that we work with and have plans, have strategic plans in place. Hearing some horror stories right now, and this thing may only be just getting started. Unfortunately, if you don't have a plan and you've done nothing to this point, it's been the correct decision. I don't know that it has been financially the least risk decision to have done nothing, don't hedge anything, buy feeders at all-time highs. Fat cattle continue to rally. It turns into a profit, $200, $300, $400 a head. It's been good, but and this is always the other side, the other shoe to drop, right? As we've gone higher and higher into record highs, record high feeder cattle, squeezing those margins. Really, no feeder cattle at the high that you buy really penciled out for even a break even. You were buying big losses if you're buying feeders and you're a feedlot. And that's a problem. When you see a top like this, I don't know if it's going to keep going or it's not going to keep going, but you give away the equity that you've gained over the last couple of years way faster. And in this environment, we can't do that. You have to protect your equity and the profits that you've made. Keep your wealth with you. Don't give it back away in some sort of a major correction. I mean, we've seen the live cattle market drop $30 in the matter of 8 trading sessions. Feeder cattle, $60+ lower in 8 trading sessions. And again, we're hearing from producers out there, they weren't hedged at all. They were hedged previously, got out of hedges, don't have any hedges in place, and now you have a massive drop. Not only that, we're starting to hear some horror stories of not only was I not hedged, maybe somebody talked me into being long this market, and I had my inventory unhedged, and I was also long some futures on top of it because everything was bullish and we're going higher, right? These are all things that happen at or near a top. Now, I'm not saying you can't go back, rally into new highs, or have a very, very sharp, swift correction, a half to 2/3 of the way back to the highs. But it's more imperative than ever right now. If you haven't had a plan, you must get one, or you risk giving back multiples of the equity and profits that you've made over the last couple of years, with margins where they're at, with expenses where they're at. That is just not something that we can do in this industry right now. What needs to be front and center? You got to have a plan. You got to know what you're going to do when the market rallies. You got to know what you're going to do when the market sells off. At what price levels do I trigger into hedges? At what price levels do I roll things down if I'm using puts or put spreads at the CME? And if LRP, livestock risk protection insurance, is not in your vocabulary right now, you need to probably talk to us. Uh, hit the like button down below. Look at our contact info, get a hold of me, email me. You need to be looking at LRP, right? Essentially, that's just a subsidized put that you don't have to pay for up front. It's wrapped into an insurance policy. It's price protection only. You don't have to pay for that up front. You pay for that at the end of the policy. It's a USDA through the RMA, Risk Management Agency, licensed, subsidized insurance product. So that needs to be front and center. What are you going to do whenever the market does what it's going to do? Have a plan, execute it, and that's going to take some of the emotion out of this market. So it's as important as ever at these new all-time highs. The easy ride straight up obviously is over. There's going to be massive volatility. There's still going to be $30 swings higher likely in feeders, $10, $12, $15 swings higher in live cattle, and we may not have seen the lows yet. You could see these massive swings in volatility. You got the funds who have been record long here until recently. Seems like they're kind of caught with a long position. They're going to be hammering on every rally. You've got producers that need to hedge on the rallies as well. You've got people that were short hedged this thing that are going to be moving cattle, physical cattle, and they're going to be buying hedges back. So there's going to be a massive amount of volatility going forward, continuing. Unlike anything we saw going straight up, and now the hard part comes. It's going to become very, very difficult. Our margins are squeezed. The feeder fat spreads flying all over the place. It was out of whack, favoring the feeder cattle. We corrected that a little bit, but unfortunately, to correct the feeder fat spread, we had to take $60 out of feeders and $30 out of the live cattle. So tremendous amounts of risk out there. You guys, if you need help, contact us, because we're more than happy to talk through what we're doing for other operations, other producers, to help them manage risk, to help them mitigate some of the psychological pitfalls that are in this market. So any questions, feel free to reach out. Be safe out there. It's treacherous markets. We'll talk soon. Thank you.